So we already talked about how if you have passive losses in rental real estate, that you can potentially deduct some of that against active income if you earn less than $100,000 a year, but it's phased out. And once you earn $150,000 or more of income, then you can no longer deduct passive losses against your active income, right? W-2 wages, 1099, that type of income. So what do? You have to carry it forward year to year. Well, there is a way around that. And this is something that can be extremely beneficial. So this is called being a real estate professional as a tax status. So if you qualify for this tax status, then there is no limit to how much losses, rental losses, you can deduct against your other income. Okay, there's no limit. If you have $100,000 of real estate losses in a given year, you can deduct $100,000 against your $100,000 of salary and pay zero taxes. Okay, so there's no limit here, but you have to qualify as this, and it's not a one-time thing. You have to qualify every year. So what this doesn't mean is being in the real estate business in the terms of like, oh, I have to take a test to become a real estate agent or a realtor or a mortgage broker or a property manager or anything like that. That is not the way this works, okay? It is simply a tax status. And as long as you qualify under the IRS qualifications, then you are able to deduct all losses against active income. So let's talk about what those are. Here are the requirements. Number one, you have to spend at least 750 hours per year working in a real estate trade or business. Number two, you have to spend more than half of your annual working hours in a real estate trade or business. So what that means is if you have a full-time job doing whatever else unrelated, then you can't qualify for this status. It can't be a side gig. It has to be your main gig. And they look at that based on an 8-hour workday and times by the number of work days there are in a year. If more than half of that is dedicated to some other job, or you actually have a full-time job in another field, then you cannot qualify for this. Okay, so that's it. But if you have a part-time job, and as long as you work more hours in the real estate trade or business than you do in this other job or jobs combined, then you can qualify, okay? As long as it's also 750 hours at a minimum. So you have to be a material participant in things. You can't be passive. They kind of defined what material means, but essentially they don't just give this status to anybody, okay? You have to prove that you're doing the work and putting in the hours, okay? So the activities that could qualify would be like development, land investment or development of properties, property acquisition, property management, operations, et cetera, et cetera, et cetera. So as long as you're doing any of those things, again, you don't have to be a real estate agent, you don't have to be a mortgage broker, nothing like that. As long as you're doing those things and you meet these other requirements, at least 750 hours per year, and you don't have a full-time job, and it's also more than any other job that you do, okay, it's more than half of your working time in that year, then you can qualify for this status and get this sweet bonus of claiming all losses against active income. All right. So to be able to do this, your profession, typically you have to list that as your occupation on your taxes when you file. If your spouses, this can't be time combined. One spouse can't do 300 hours and the other one do 450 and combine them. This is per person. And you have to document the time. The IRS understands that people try and cheat the system sometimes. And so every once in a while they'll do audits and you've got to show documentation. If you record keep and you document, then you are going to be okay. So you've got to keep track of hours, activities that you did, the dates that you did them, and make sure that you are actually hitting the requirements to claim this special tax benefit. What I've seen commonly done is maybe there's one spouse that has a full-time job. Maybe they're a high earner, right? They're earning a lot of money, so they're able to invest in real estate. The other spouse maybe doesn't have a full-time job or maybe just works part-time, but their job, in terms of as a couple, their job is to be the real estate professional and they manage the properties themselves, right? You can have property manager, but she that spouse, he or she, is managing the property manager, right? Is checking on the properties, is doing this or that, right? So if that person is managing the real estate portfolio, then that can count as long as you hit the other requirements. One thing you do need to do, again, work with a tax professional, all this, right, to make sure that it's done properly. But typically you also have to state, if you have multiple properties, then sometimes you have to state that you're combining them for the purposes of the number of hours that you're working on the real estate properties, okay? The number of hours you spend on this is important. So work with an accountant to make sure you get all that right, okay? So anyway, that's one example. Now, one example of putting the cart before the horse that I've seen is where we get so focused on saving taxes that we don't realize that it doesn't make any sense to do it. One quick example. A family, this is a client, right? They're moving for a couple of years and they were going to rent their house out. Their accountant said, hey, so he worked, she didn't, she was a stay-at-home mom. And the accountant said, hey, guess what? We actually can save you a ton in taxes if your wife becomes a licensed real estate agent. So all she has to do is study, pass the test, and then she can be a real estate professional and will save you a ton of taxes. And they talked to me about this and they said, hey, this is the idea. Like, do you know anything about this? Number one, you don't have to be a real estate agent. You don't have to be licensed and take a test. How many hours are you going to be putting into that? And for what kind of tax benefit? It doesn't make a whole lot of sense. So to get the real estate professional tax status, you do not have to be licensed as an agent or anything like that. Okay, so that's number one. That's a lot of time spent. And what is actually the tax benefit? Oh, there's not really a tax benefit here. The other thing is that they're going to come back to the house. So this is not a rental property. This is going to be their personal residence. And, if they sold, right, they get the capital gains exclusion and all that stuff. So there are some things where you can over optimize and it doesn't make any sense. I just want to put that out there. It may not make sense to do this. It might be too much of a hassle for very, very little gain. Let's walk through an example of this and how much taxes you could save. So let's look at married filing jointly. Total income is $250,000. Okay, that's the taxable income. So taxes owed based on the tax brackets, right? Progressive tax system. Federal taxes owed $47,670. Okay. With a special status, and let's say that they have $50,000 in net losses, right? Net real estate losses. Okay. So in that scenario, they wouldn't be able to deduct any of it against their $250,000 of taxable income. So they owe $47,000 some odd dollars. Now, if they have the special status, if they qualify, and they are able to claim the $50,000 of losses, all of a sudden their total taxable income is $200,000. Taxes owed is $35,670 for a total savings of about $12,000. And again, they still get all the cash flow. They still actually earned $250,000 plus their rental income. So their actual cash flow is higher than this, but they were only taxed on $200,000. So they have a ton of extra cash flow and they save $12,000 in taxes. That's a pretty nice benefit, all things considered. So obviously, as you scale up the size of property, and if you get more detailed with cost segregation studies and have massive losses that you can claim against your income, then it probably would make sense to qualify at least for a year or 2 years, maybe not ongoing, but there's a lot of tax savings there that are available. So that's an example of how the real estate professional tax status works. If you're interested, there's a ton of information out there, or work with a tax professional to make sure you can qualify and get that done the right way. All right, see you guys in the next video.
Smart tax planning supports long-term wealth.